What are your thoughts? See, people don't know there's lyrics to this song. They think it's just... That's how it goes. Ladies and gentlemen, welcome to What Are Your Thoughts? My name is Downtown Josh Brown, here as always with my partner, my friend, my mentee, Mr. Michael Batnick. Michael, say hello to the folks.
Hello.
I mentor you a little. Come on.
A little bit.
Give it up. All right. Shout out to everybody who joined us for the live premiere. We always appreciate it. Thank you guys so much for being a part of the show. And we're going to have a lot of fun tonight. We have a lot to go over. First, I'd like to give a shout out to our sponsor, best sponsor in the world, Y Charts. Michael, please read highlighted text and then riff.
I will not do that. Listen, what do I use Y Charts for, you might ask? Everything I say, including keeping warm. Look at this. Look at the swag.
Yeah.
Wore this to my walk to Starbucks. I wore it all over town today. I use Starbucks. Nope. I use Y Charts to drink my Starbucks. I use Y Charts for economic data. I've got dashboards. My dashboards are not your dashboards. They're proprietary. They're customizable. I've never seen your dashboard, Josh, but believe me, it's not as good as mine.
Yeah, my dashboard is like IMDb is one tab, and then I got off the Y Charts webinar today with Sean Brown. We kind of did our state of the advisory business and trends for 2025. It was a lot of fun. We used a lot of Y charts and a lot of compound charts. Shout to Sean and Chart Kid Matt. One of the interesting things was about, we took polls. What percentage of people think that they're going to be using alts and private equity, or which categories they think they're most likely to use. But we did a lot of stuff like that. So if you're an advisor and you care about this stuff, definitely recommend checking out the Y Charts webinar with me and Sean Brown. Guys, if you've never used Y Charts Professional before, click the link in the show notes and get 20% off your initial Y Charts Professional subscription. Tell them we sent you. It's go.ycharts.com/compound. Okay, you're up first. Take us in.
Oh, am I? Oh, I thought this was you. Okay.
Nope.
All right. So we around here and Wall Street generally speak a lot about the Santa Claus rally, right? Yeah. Which is the simple idea that the market tends to rally from a period of, I don't know, JC, Jeff Hirsch, they've got the stats, but like towards the end of the year, and especially in a year when the market is up, there is a tendency for people to chase into year end. And that's like sort of true, but actually maybe not exactly as true as we thought. Callie Cox, Chief Market Strategist at Ritholtz Wealth Management, she brought some data. And in a post she wrote, Callie says, since 1950, in years when the S&P 500 has been up 20% or more through November, the index also rose in December about 75% of the time. That sounds promising, says Callie, until you hear that in all other years, the probability of a rally in December was 74%. Gosh damn it, Callie.
Wait, really? This is shattering. I haven't read her piece yet. This is shattering one of my long-held beliefs. So in every year, whether the market's up 20% or not, the chance of it rising in December is 74%?
Yeah, so I don't know that this necessarily negates the fact that Santa Claus does come to rally in the stock market, but like...
It's not even Santa Claus, it's like basic seasonality.
Yeah.
We know that there's a 50% chance that the stock market will make its high for the year in either December or January. Nick Colas and Jessica Rabe have been doing great stuff on that.
Great
They're
stuff.
50-50. So you can't say that about any other 2 months of the year.
So I don't think that this is necessarily disproving the Santa Claus rally, but I thought it was interesting because I've never seen it laid out that way. She also shares that, chart on please, only once in the past 22 years has the best performing sector from January to November also been the best performer in December. And that would pour a little bit of cold water on this idea.
The chase idea.
That's idea.
Interesting. Okay, so in other words, all right, but so I don't think it does, and I'm going to tell you. Well, tell me why you think it pours cold water on the idea of performance chasing.
Just a little bit, not the whole thing.
Why? But like why?
Because you would think that people would tend to chase the hottest sector. No,
Michael. No, just kidding. No, just kidding. My conception of
my
the
mentor,
year-end
ladies and gentlemen.
Yeah. My conception of the performance chase was not that people would necessarily chase the biggest winners, although, of course, you could picture people doing that. It's that they look for catch-up trades elsewhere, and they say, what didn't go up as much yet? Or it might even, if they're suicidal, what went down the most? I never thought of the catch-up trade as, oh my God, I missed Meta all year. The stock was 200, now it's 400. Let me buy Meta. I've always thought of it like, I missed Meta. Alphabet's not up as much. Let's ape into Alphabet for the last.
But you think like the market thinks that way?
No, I think portfolio managers think that way. Portfolio managers do not say, what's up the most? I want to add it so I look like a clown in front of the IC who I have to report these trades to at the end of the quarter. So I think the way portfolio managers think is, well, what's the trade that I haven't missed yet? So I think the chase is a market-wide phenomenon, but I think the way it manifests itself is people looking for catch-up. So, I mean, that's just how I've always thought of it.
Here's
I don't know
another
if I'm right.
here's another seasonality thing. So goes January, so goes the year, right? That's something people on Wall Street say.
As goes January.
Oh, as goes, not so goes, as goes. Okay, so I thought this was a great chart. I think, who did I pull this from? Was this Daily Chart?
This looks like
perhaps?
Goldman Sachs.
No, it is. I'm saying, who is the via? Where did I get this from? I think it was Daily Chart Book via Goldman Sachs. Okay, so what we're looking at for those who are listening is the median monthly flow into equity mutual funds and ETFs as a percentage of total AUM, and this goes back to 1996. And what I noticed right away is, look at January, biggest bar in this chart. So a lot of decisions on where people are allocating assets happens in January.
Yeah. You know what? Would you have guessed this if I
Probably.
asked you what month has the median monthly flow been highest as a percentage of total AUM?
I think I would have guessed January.
I think I would have said December or January.
Yeah.
And December, actually, it's negative, which also makes sense. This is people withdrawing money either for Christmas or to pay taxes.
Yeah.
Let's assume something along those lines, right?
Well, so I like the data that Callie shared, but I also can't be convinced that there is not some seasonality element. If the market's done great all year, there's no reason to think that December won't be a good month unless something comes out of nowhere and takes us off track.
Do you know where Santa Claus is from?
Freeport?
Turkey. Yeah, not a lot of people know that.
I didn't know that.
So,
was he there to get hair implants?
It's the model of what Santa Claus became, like the proto version in folklore. It's Turkish, and all that Sinterklaas stuff from the Netherlands is not up. We have the elves. Look at this.
Oh,
hey boys.
a double hug. Look at this guy. Look at this guy.
Oh, I love him.
All right, get off screen. Love you guys. Go for real.
Kobe, we're under time constraint.
Yeah, go. Keep going. All right. So you were saying
So I was explaining Santa
Mr.
Claus.
Claus.
So it's really Frank L. Baum, the creator of The Wizard of Oz and all those great characters, who creates the version of Santa Claus that we know in the modern day. There were a lot of like cartoons from magazines and newspapers in the late 1800s, early 1900s New York that, like, if you were to point to, where's like this Americanized Santa Claus from? But the original Santa Claus folklore is Turkish. Okay, we're going to introduce the Degen Dow. I'm so excited about this. So I think that if we were to make a list of the biggest themes of 2024, one of those themes would have been degeneracy. Can we agree on that? Like that's been like one of the things that people have done the most.
The leverage, the leverage ETF chart that we shared, that Balchuna shared this week, it's one of the charts of the year for sure.
Yeah, 100%. So people, and I guess this makes sense. You're in year 2 of this massive bull market, and back-to-back years plus 25% for the S&P. Of course, people are like, "What else could I do?"
Yeah.
Options trading, leverage ETFs,
Crypto.
Bitcoin trusts, AI. It's just like, this is like one of the big things. And you were dead. I want to give you credit. In 2022, Ben or me or maybe both of us posited this idea that like the apes are dead, the Reddit, the Wall Street bets, it's like it's over. You were like, dude, these people are never going away.
Yeah.
And you could not have been more right about that. And I was on the other side of that. I thought it would take a generation for people to lick their wounds and want to speculate again. It took a month. We are so back, baby.
Yeah.
Anyway.
Yeah. I guess just the thinking was that they were just going to move from whatever's working to whatever's working.
And that's exactly how it played out.
Yeah.
Okay. This is a Wall Street Journal article from July of this year, just to define the term degen. The article says, quote, degenerates are swarming the stock market. A risky style of trading is roaring back in popularity, driven by amateur traders who call themselves degens and pile into long shot trades that proudly have nothing to do with the conventional ways of assessing investments. Some are flinging cash at specific stocks or cryptocurrencies just to be part of a movement. Others are sticking around for the jokes and memes. Degen can be a noun, adjective, or verb in their language, shared mostly among young men. It's a self-deprecating identity that some have traced back to the term degenerate gambler. Behind it is an ethos that values audacious bets on the market and is skeptical of investment norms. You only live once, so why bother with traditional advice? Yeah, I think we have an epidemic in this country of 20-something-year-old men who are way too online and way too unengaged with the real world, probably not dating enough, probably not thrilled with their careers, and they have sought refuge in degeneracy in general, not just in stocks and crypto, but in sports betting, in harassing people on the internet, et cetera, et cetera. It's not great, but we can have some fun with it, right? There's no rule saying we can't see the silver lining here. It's made the market a little bit of a circus. It's given us a lot to talk about, and it's been making the headlines pretty much every week. There's been some insane thing taking place, and who doesn't enjoy a little bit of that from time to time? Yeah,
Yeah.
Are you a degen? Are you Are you on the border of human slash degen? Are you getting close?
Yeah, no, I mean,
You don't seem degen to me as much as maybe you were 10 years ago.
no, I don't I am and I'm not. Like, I bet every single weekend. I bet on every Knicks game.
Yeah.
So I've got like that, but I don't like ape into investments. It's just so
No, you don't.
it's just so antithetical to, like, even though I'm tempted, like, I'll be honest, last week I almost bought the MicroStrategy dip, but it's just so far afield from like what I believe in to be. I did that. You know what I mean?
You're also knocking on 40, and you have 2 kids.
Yeah, I don't
and
have time
it's
for that shit.
impossible
Dude,
to have time for that.
When I started investing, I was trading options out the ass, and I got over it.
All right. Well, listen, maybe we just invented a vehicle for you to trade, because we have created, and you're seeing this, guys, for the first time ever, the Degen Dow. I want to tell you a little bit about the methodology of our index, and I want to stress, this is not investable. It's not an ETF. Don't buy these yet. We're in talks. All right, 30 components. This is the most memey, high beta, absurd trading vehicles in the market, favored by the Robinhood, StockTwits, Wall Street Bets crowd. These are long-only investments, and there are no ETFs in here. These are Bitcoin-related stocks, gaming and gambling companies, Cathie Wood, AI, Trump, space stuff, Reddit itself. All the major degen food groups are represented. I think we ended up equal weighting these. We started with 45 names. We removed the 15 that were too small by market cap and equal weighted what was left. I don't know if we have a drum roll, but let's throw a chart up of the Degen Dow performance. Look at this. But I don't have the components here. Do you have the? That was the whole point, right?
No, it's here. No, next chart. There it is.
Oh, it is?
Yeah, there it is.
Oh, these are the tickers. All right, that's cool. An equal weight basket of the 30 most egregious meme stocks. They're not all meme stocks, but they're like
egregious.
They're meme. First of all, shout to Sean and Chart Kid Matt and Callie. We had a lot of help internally on this. First of all, look at the left pane before we get into the tickers. Does that surprise you that
No.
that performance, that
80+% drawdown? No.
But
No,
like,
we were there.
But look how it's like turning up.
Yeah, I want to get long.
Now, look at just the year to date in the right pane. So rebased to 100, it's at 149.
It's up 50% year to date.
I think it's 44% year to date is what Sean shared, and that is obviously way ahead of the S&P 500. This thing is ripping into year end.
So you own you own one of these stocks?
I own Nvidia,
Right.
and Reddit.
You own Reddit. I forgot about that.
I do. and
Damn, still working.
obviously both look amazing. All right, let's go through some of these names. Tell me if there's anything on here that you think doesn't belong. A lot of people know ACHR.
I don't
Do you know this
that.
company, Archer?
No, I don't.
This is like space stuff.
Oh.
Okay, so it's not.
Straza was telling me about this.
Yeah, of course he was. All right, AMC goes without saying. AppLovin, APP. This
By
is
the way,
best.
you made the case for this and then you didn't buy it?
Yeah.
Good call.
Fucking idiot that I am. It went up. It went up. I think maybe 200%.
Speaking of fucking idiot that you are, remember when Coinbase was going to zero?
Yeah. Well, back to back, my two best calls the last couple of years. All right, Coinbase is on there. Carvana, of course, has to be. DJT, of course. We put in DraftKings and Flutter. Flutter, a lot of people don't know this. British company, trades here, parent of FanDuel.
Yeah, I had no idea. JC told me about this.
What is Geo?
Geo? I have no idea. Let's see. Geo is it's Geo Group. I have no idea. What is this thing?
Engages in the ownership, leasing, and management of secure facilities. The fuck?
Why is this?
This is a meme stock?
Let's see.
Maybe it's. All right, we'll have to ask the boys.
Whatever,
We're too
dude.
old.
Just buy it. Who cares?
We just buy it. GameStop, Hims and Hers, of course. Robinhood has to be on here. Yes.
Yes. Definitely.
Lucid, which is electric cars. Mara, which is a blockchain mining, whatever. Also now a Bitcoin trust. MicroStrategy, which is probably one of the biggest market caps on here. NVIDIA, can't not include it. What's PD?
PD, PagerDuty. How'd this make it? Was this supposed
P. Diddy?
This doesn't look like it belongs at all.
No, there must be a reason. It must be a meme thing or something. I don't know what it is. Palantir, Roblox, Reddit, Riot Blockchain, goes self-explanatory. Rivian, which is electric trucks. Rocket Lab, which this is the thing people buy because Tesla's price is too high. You know who told me about this thing 10 points ago? Joe Fahmy, and I didn't listen.
Never fake
It's it's a money-losing space rockets, blah, blah, blah. Worked. Rum, which is Rumble, which is another now Bitcoin trust. SMCI, which was like, it was NVIDIA, and then it was like a short, and then they said they had to investigate their own financials, and then they cleared themselves, which is really funny. But anyway, that stock's one of the wildest stocks in the market. That's on here. SoFi, okay, I kind of get it. SoundHound, which is AI, SOUN.
I haven't checked in on this in a while. Oh, it's ripping.
Of course it is. It's in the Degen Dow, Michael.
Yes.
Why is U on here? What is this?
Udacity.
Uranium? Oh,
No,
Unity software.
Unity, not Udacity. Unity is like a big gaming one.
Unity is metaverse stuff. All right. And VST, which that's really interesting. This is
the utility that's like
this is the utility that's powering all the AI data centers. But look at this. Just look at the performance, and you'll understand why it's here.
Yeah. Looks good.
This thing's out of control. I think it's one of the only S&P 500 names that's up more than NVIDIA. And it's a former utility that now trades as an AI proxy.
I'm quite surprised that the Degen Dow or something similar does not currently exist. You know what?
It might, and we've never heard of it. I don't know. Like there might be. Well, there were the ETFs. Like remember Van Eck launched the thing with Portnoy, Buzz.
Buzz.
But so this is something different than that.
Yeah. However, I also do think that people like to really degen. They're not looking to buy an ETF and chill. You know what I mean? Like they want to be active. They want the juice. They want to trade.
Yeah, well, we're definitely not selling this. But I will say it's up 44% year to date again. So if anybody's listening.
If
anybody wants to make an ETF and pay me royalties. Anyway, I think we should follow this thing on
well, we definitely will.
Basis.
And, last week I was telling everybody, listen, forget signs at the top. It's only the obvious in hindsight. Boom.
Yeah. Josh Brown, Michael Batnick launched the Degen Dow on their podcast.
Yeah.
That might be that might be one of the signs of a top.
That could do. All right, let's talk more about some of the stuff going on inside of the market. So this chart, again, is a via from Daily Chartbook via JP Morgan. We're looking at options retail market share as a percentage of total.
What?
So
who is doing this? What? Can I ask you a question? 20% of options trading is retail. Am I reading this right?
You know what? It's funny you ask because I'm not exactly sure, but whatever. We know what it is. It's a mania.
It's a mania, but it says
confusing.
stock number of trades as percentage of total orders.
So that part.
I don't know what that means.
That part threw me off. But be that as it may, it's a mania. Okay. Next chart: asset manager positioning at extremes. This
Not
is
surprising.
Not surprising. But this did surprise me, Josh. Next chart. AAII bearish sentiment shot up. Not to extremes at all, but like you don't usually see this in a bull market.
Can I save you probably 7 hours of your life? Don't spend 5 minutes a week on this. Like that'll save you 7 hours a year.
No, I don't. But I thought this was interesting.
No, I know, but I have been watching this for as long as I've been in the industry. I couldn't tell you what this ever does other than reflect whatever the stock market just did over the prior 3 days.
And I'm telling you,
I don't
this
honestly
is an
know what
interesting
this
divergence. That's all. All right, let's
why
keep
because
moving.
because the market went up and this thing and this thing shot up. The
Yeah,
bearishness.
you usually don't see bears. People get bearish at the highs.
It's not
All
really
right.
it's not really shooting up though. It's
All
a
right, whatever.
minor little.
So this morning we got another announcement from BlackRock that they are furthering their entry into the private markets. Before we throw up the chart of the BlackRock versus Blackstone, let's just go through some of the headlines first. So a couple of months ago, back in June, BlackRock, we spoke about this on the show, BlackRock acquired Preqin, the leading private market data solution provider. A couple of months later, they announced on their earnings call that BlackRock completes acquisition of Global Infrastructure Partners. Global Infrastructure Partners is a private investment company. They invest in, you guessed it, infrastructure. And then today, BlackRock to acquire HPS Investment Partners to deliver integrated solutions across public and private markets. HPS has $150 billion in client money, give or take, in mostly private credit.
And they paid $12 billion for that.
In stock. And why not? The stock is working, spend
right.
it. So BlackRock has been the dominant player in public markets, both in terms of equity, fixed income. They cleaned up. They competed with Vanguard. They went head to head. I don't want to say one's winning, one's not. They're both winning, but BlackRock has done incredible things there. And now, not surprisingly, they are making a big push into private markets for reasons that we can get into. But one of the obvious ones is that's where the money is. So chart on, please. BlackRock in their public equity vehicles is charging, the ETFs are
It's crazy.
low single-digit basis points. So
Yeah.
The chart on the screen is as such. On the left-hand side, we have the assets under management. This is as of the end of the third quarter, 2024. BlackRock managed $11.5 trillion compared to Blackstone, which manages 1/10 of it, 1.1 trillion, not even 1/10. Okay. And then we have the market cap as of the same period of time. And BlackRock trails Blackstone, $140 billion to $187 billion. Why is there such a discrepancy given that these are both asset
Basis
managers?
Basis points.
It's the fees. It's obvious.
That's it.
So this is the game. And I'm not saying I'm not judging this. We're all capitalists, right? And BlackRock is getting into the game in a big way. Probably will lower fees for the industry because they are the 800-pound gorilla. And it's coming. It's here.
What's really interesting about this is BlackRock is managing 10 times the amount of money as Blackstone, but Blackstone is a bigger market cap.
Yeah.
BlackRock was a spinoff from Blackstone. Mm-hmm. In the very early days, Steve Schwartzman and his partners who founded Blackstone recognized that there was value to, even though they were investment bankers doing transactions, there was value to having an asset management arm. And then ultimately it didn't make sense to be part of Blackstone. They recruited Larry Fink, who had just blown up in a horrible trade somewhere in Boston. I think he was at Credit Suisse, First Boston maybe. I think maybe First Boston had to be rescued by Credit Suisse, is the way I read the story. Anyway, they believed in Larry Fink, and they brought him in to take this thing over, and then ultimately it spun out. But it's really interesting to see now the whole thing come full circle. Blackstone has gone from doing private equity transactions to managing private equity funds, And now BlackRock wants to be in that business 40 years later, after all, which is amazing. And they're going to do it via making acquisitions with their very highly valued stock, which of course they should.
Smart, yeah.
Here's what you get when you do that. You get a built-in sales force that already knows the product. You get a built-in customer base that's already invested in the product. You get the institutional expertise of what buyers will buy and what they won't buy. You get instant market share, and you get the infrastructure that enables you to launch new products without having to hire, 5,000 experts in building funds. It's really the only way, quite frankly, if you're BlackRock, to get into this market. And what's really interesting to me is this is where you're going to see a big divergence between Vanguard and BlackRock.
Correct.
Vanguard and iShares will not diverge, which BlackRock owns. But BlackRock, the parent company, corporation, versus Vanguard, the shareholder-owned, mutually owned provider of asset management products. Vanguard is not going to follow BlackRock down this rabbit hole, or if they do, it'll be with a toe in the water.
Well,
not
they
with a massive acquisition.
They dipped a toe with that private equity company, Harbor. I can't remember the last name.
Yeah.
Years ago. And
I don't think their clients are asking them for this.
So one thing that Blackstone has that BlackRock previously didn't was the fee-related earnings that they talk about on the conference call. Obviously, they're higher with private vehicles, but they're also stickier because guess what? There's no net outflows, right? You can't get out.
Yeah, you can't get out.
It's locked up. So from BlackRock's point of view, I think it makes perfect sense. I think for the ultimate buyer of these products, it's going to be a better wrapper, a better product, and probably lower prices. So there's
so much more. In the interest in like keeping the show under 4 hours, let's keep going. But there is a lot more to say about this, and we will say it over time. We don't have to unload it all. All right, I want to spend 2 seconds on this, and we're going to talk more about this on the Compound and Friends at the end of this week. But I want to say rest in peace to Art Cashin, and I want to extend our warmest, most heartfelt condolences on behalf of Michael, myself, Barry, everyone at Ritholtz Wealth. I'm just gonna quote a little bit from the Wall Street Journal obituary. Art Cashin, most people know him via CNBC. I was fortunate enough to have known him over the years in person, but he was the living legend on the New York Stock Exchange. He's been involved with CNBC since its invention 25 years ago. He's the guy, when you turned it on New Year's Eve, that would stand in front of hundreds or thousands of traders, and they would sing, "Wait Till the Sun Shines, Nelly." Here's a great shot of that. He was just like, I don't want to say mascot because that degrades what I'm trying to get across. He was like the avatar of the floor trader, and he was literally like the embodiment of what it meant to be a New York Stock Exchange floor broker, floor operator. He was the director of floor operations for UBS, having acquired Payne Weber, which he had spent a lot of his career at, and again, frequent guest on CNBC. There's a couple of things I want to say about him, and again, we could talk more about him on Thursday with on the podcast. But have you ever heard of anyone or met anyone ever say they don't respect Art Cashin?
No.
Nobody. Does anyone else in the history of this thing, or alive or dead, have that kind of universal approval and respect? Nobody.
I've never heard a bad word uttered about the man.
Never. And generous with his time, generous with his ideas and his insights, supportive of everyone around him, helpful to people that he had never even met. He'd meet you for the first time and ask you what he could do for you. And you know what? He's a volume up guy. He might be the volume up guy. In the last 5 years, he hasn't been on the air that much. I think the pandemic was really tough for him because the exchange was his home. And I don't think he ever missed a day there. I don't think he took a lot of vacations. I don't think he took a lot of breaks. So not having that place to go to, I think was not great. And but prior to that, when he was on TV almost every day, if you worked in the business, or even if you didn't, you turned the volume up when you saw that man in front of a microphone. And the last thing I want to say, his coverage during the 9/11 attacks, not coverage, his commentary, his steadfastness, his being there when they reopened the exchange, like that was spiritually and emotionally really important to New York, because it was just like, oh, okay, things are back to normal. Art is at the exchange and everything's functioning. That was really important to a lot of guys that you and I know. So, all right, anything else you want to say on this, or we'll save it for later in the week?
Yeah, no, just universally beloved. I've said it like a million times. Nobody has a 100% approval rating. Like, there are people that hate Mother Teresa, people that hate Warren Buffett. Nobody hates our Cashin.
And how could you? Right. Okay. You're up next.
All right. So remember when Michael Burry tweeted sell in January, February 2023? We spoke about this, and I am not going to disparage Michael Burry because I'm sure that he changed his mind and whatever. It's fine.
Excuse me. It's Dr. Burry.
Dr. Burry. Who I will disparage are people who should know better that took this and shoved it down people's throats.
Retweeted it. Oh, who knows better, you or Dr. Burry? Well, I guess me. Turns out, who knew?
So again, I'm sure Burry changed his mind, right? Like, it's fine. But like the people that took this and wrote articles and tried to scare people, shame on you.
Is he still doing this shit, or is he quieted down?
I don't know.
Okay. He obviously is the architect of one of the greatest trades of all time. This has been very well documented. Nobody can take that away. I don't think that he would say that he's on Twitter to give people financial advice, right? Like, so people take it. He's allowed. It's America. He has freedom of speech, and he is allowed to share his opinions and express them in any which way he wants, just like I am or you are or anyone else. And he's also allowed to do stream of consciousness shitposting, which, people do it. People have a few drinks.
Yeah.
They send a tweet. People wake up in the morning. They have 3 cups of coffee, and they're on fire, and they just tweet stuff. Stop listening. Stop reacting. It's not financial advice for you. And to Michael's point, if you're one of these people who exists to sell subscriptions by scaring others, and you use this as ammunition in your scheme, I mean, dick move. And what are you going to say now?
Right.
Like, what are you telling the people that subscribe now? Because some gains you can't replace. This is S&P 4,000 to 6,000. How are you going to make that up to people that you used Dr. Burry's tweet to scare them out of their investments? You really can't.
You can't. All right, let me quickly make the case for, you know what, I was going through, chart off please. I was going through my portfolio. I was like, oh, what have I not made the case for? Do I want to make the case for anything? I mean, everything's pretty extended. You know what?
You're really putting a lot of thought into this. I like that.
No. You don't need to always have a sexy pick, okay? My make the case is very simple.
I did this one 2 weeks ago.
Did you?
Yeah. Were you there?
Are you sure that I was on the show?
Fairly certain. I won't do the show without you. So they offer, listen, Duncan tries to replace you every week. I say, I'm not doing it without Michael.
Well, you know, it was such a good idea that you incepted it into my brain. So, all right, let's just go through this real quick. So did you know that technology stocks, which have been leaders of the market, actually haven't outperformed the market since the end of May 2023? I have a chart of XLK divided by SPY. And you could use the Qs or whatever. I understand that like Google and Meta aren't in here, but nevertheless, like it's kind of wild, no? Would you have guessed this?
I don't know. Somebody told me this for the first time last week. They showed me financials versus tech, and I didn't know it. And I was actually really surprised.
Next chart. Check this out. This is over the last 3 years. So I've got Meta, Apple, Microsoft, Amazon, and Alphabet. All right. So the Mag 7 minus Tesla minus NVIDIA. Over the last 3 years, only Meta and Apple have outperformed the S&P. So the S&P has outperformed Microsoft. What? With the AI? Yes. The S&P has destroyed Amazon, and the S&P has destroyed Google.
Yep.
Next chart, please. If you just zoom into the last year, sort of the same story. Only Amazon and Meta have outperformed over the last year. So over the last year, the S&P has beat Google, it's beat Apple, it's beat Microsoft.
I noticed you've kept NVIDIA off these charts. Good decision.
I did. Okay, so let's talk about Amazon for a second. Amazon relative to the S&P peaked in 2020, It has since recovered a lot of the losses. I mentioned, I was talking to Ben. We just had a really bad bear market in 2022. People just like don't talk about that. Like we've pretended it didn't exist. Amazon got cut in half, maybe a little bit worse. So if you look at Amazon relative to the S&P, it peaked in 2020, and it's about halfway, give or take, to recovering those losses.
Yeah.
So it looks good relative to the S&P, and on an absolute basis, it's about to make a new all-time high. In fact, it did a few weeks ago. So stock looks good. I own it.
Well, when I made the case for Amazon 2 weeks ago, I said most of the things that you just said, so I agree. And actually, I bought more. I bought more Amazon yesterday. And I was talking about it on CNBC today with Belsky and Stephanie Link. And look, today, Amazon had their big AWS event, and they made a ton of announcements about the Trainium chips that they are now making available to AWS customers for AI. And one of the things Jassy said at the event that got a lot of attention was, look, we're not investing money in AI because it's cool. Like, we're investing money in AI to make money. And like, this is about profitability, not just for us, but for our clients. And the Trainium chipset is something that I don't think is really in the stock, or maybe it's starting to be in the stock. But if they become one of the biggest technology arms dealers to AI customers, which the combo of AWS and their own chips puts them in a position to do, it's not a grocery store with a website. Like, it's a very different valuation, I think, on the street. So it's not cheap stock. It never is. I think it's 40 times next year's earnings. But they have a lot of levers to pull to boost those earnings next year, and they are very aggressively pursuing the AI opportunity. And they actually have a user base where it's not theoretical. They could like literally talk in terms of ROI today, like what's happening on the platform. So I like the story too. I've been selling Alphabet and buying Amazon. So just for make people aware. All right, I'm gonna stump you with my mystery chart, and then we'll get out of here.
Okay.
Or maybe I won't stump you. Let's get that mystery chart up, guys. Okay, I'm not giving you any clues. I will read the clues that are already on this chart.
I think I know what it is.
Stop. Market cap since inception. The market cap peaked at $507 billion. It's $100 billion today. What is my mystery chart?
Intel.
Fuck. All right. Round of applause. No, I'm glad you did. This is Intel versus the semiconductor holder index, of which it was once the largest component. Now it is just a component. Since the inception of the SMH ETF back in 2000, Intel is down, believe it or not, 30%. Think about that. The SMH is up 603%. See, this is one of those examples where not everybody could be Warren Buffett. Because if you held Intel for the last 25 years and this is your reward, you are absolutely hating life. Can we put that chart back up? I want to show you where these two charts diverged. It's about 2019, 2020-ish. This is right around the time the previous CEO of Intel came up with the idea that the business opportunity of the future for Intel was not going to be GPUs or anything so conventional. They were going to rebuild Taiwan Semi as an American company. They were going to double and triple down on fabs, and that's where that separation occurred. Intel is down 57% in total return and has lost $147 billion in market cap during the subsequent CEO's tenure, Gelsinger. And the reason why we did this as our mystery chart today, Pat Gelsinger has stepped down as CEO, and it is not obvious, internal or external candidates, who wants to step into this thing and try to fix it. So this has been truly disastrous. If you're an employee and you took ISOs to work there, let's say you left another semiconductor company or whatever, you are substantially underwater if you've done so in the last few years. It is just an ugly, ugly story. Do we have this thing where it got kicked out of the Dow? Do we have that chart? Do we make that chart? Sounds like no. All right. I was going to show you where they got added and where they got kicked out.
Oof.
Here we are. Great job, guys. Awesome. All right. Added to the Dow Jones on November 1st, 1999 removed from the Dow Jones on November 8th, 2024. I mean, this
Thank you for your
is
service. Jeez.
dude, this is how long-term shareholder this is how long-term stock holding goes really, really, really wrong.
Well, guess what? For most individual stocks, it does go really wrong eventually.
I think this should be in some of our decks about like why we diversify and single stock risk, because this is like a poster child. Even if it turns around, the ride has been so bad. It's unimaginable.
Disgusting.
All right, so we're going to end on a high note. Guys, that's it from us. We want to say thank you to everyone once again for joining us in the live. We are here every Tuesday at 5 p.m. Eastern. If you're a podcast fan, make sure to check out the Compound and Friends podcast tonight. I'm talking to Jim Bianco about Donald Trump setting up a shadow Fed governor. This is really interesting. Tomorrow morning, New Animal Spirits on all podcast platforms. Make sure you tune in. And at the end of the week, Ask the Compound with Duncan and Ben, and an all-new Compound and Friends. We'll see you soon. Thank you so much for watching. Thank you for listening. We love you back.